So, hey guys, it's Maureen Folan here, broker owner of the Maureen Folan Real Estate Group. And today I'm with Robert Yusupov, who works with FMH Loans. And I wanted to do a presentation today and just kind of talk about what is happening in the mortgage world. I do a lot of transactions with Robert. He is based in Queens, like myself. And I wanted to hear firsthand from him what he's experiencing, how the banks are lending, what kind of issues he's coming across, and just kind of get a feel for how mortgages are selling and what's going on with that. So Robert, thanks so much for joining us.
Maureen, thanks so much for having me on. For those that don't know me, my name is Robert Yusupov. I have been in the mortgage industry since 2001, pretty much in Queens. So just like Maureen, this is our neighborhood. This is what we know. This is what we specialize in. And it really is, to say the least, it's an interesting time. So you and I, we both lived through 2008. We've seen the 2008 market, and this is different. This is not the same. For me personally, 2008 was a problem where banks didn't have money. Banks ran out of liquidity. Banks were afraid of whether we're going to keep our doors open. Today, the Fed came in and they saved all the banks. There's plenty of liquidity, but banks are just afraid that people aren't going to pay back. So there's a ton of different problems that the banks are facing. It's just different in many, it's just a different retrospect. But mortgages will still be given out. People still buy. Houses will need to be bought. People need a place to live. Owning is always, no matter how you look at what times you look, it'll always be better than renting. So regardless of what we're going through, this too shall pass, and we will continue.
All right, well, let me ask you this, Robert. What are the rates today for a typical 30-year fixed loan? What would a buyer, consumer expect to get a rate at today?
So interesting. It's a great question. In 2000, I shouldn't say in 2000, but beginning of March, when this whole thing was just coming on and everything just started with the COVID, rates dropped to, I'd say, high twos, mid twos, low threes, and then just a massive influx of mortgages just started coming in. And when I say massive influx, there's about $11.5 trillion of mortgages that are lent throughout the United States. Banks can only handle 2.5 to 3 trillion per year. What happened is a third of those $11 trillion mortgages all wanted to do refinances in the same week. Yeah, you could pretty much imagine. You have 3 trillion, what was handled for a year is now coming in a week. Banks got inundated with volume. So they started artificially raising rates to prevent more applications coming in. So this is when the Fed stepped in. Feds came in and they said, you know what, just to make your money available, we're going to start buying mortgages. They came in and they started buying mortgages. They first put a cap of $400 billion that they were going to buy. Then they said, we'll buy another 40 billion. And then when they saw that wasn't helping, they came back a week after and they said, we'll buy an unlimited amount of mortgages just over time, just to bring liquidity into the market. So rates went from 2.5, 275, all the way to 475 in a matter of a couple of days. Talk about crazy. We've never ever seen that before. And then once the Fed stepped in and started with the whole liquidation, now we're starting to see them crawl back down to low threes on a 30-year, which is
super cheap.
Free money.
That's pretty much free money.
Unbelievable. So great time. Whether you talk about to buy a house, when it's just incredible time to borrow such a big amount at such a cheap price.
Right. Well, let me ask you, have you seen bank requirements change over the last 2 to 3 weeks since we've been in this pandemic with COVID-19?
Yes. Unfortunately, there's 3 different, I'd say, specifications or requirements for loan amounts. So anything that's up to $510,000 that is backed by Fannie Mae and Freddie Mac. The major change that happened with COVID, and there's actually a new guideline, it's called COVID-19. The major change that we're starting to see is verification of employment on the day of the closing. So prior to that, in the normal world, if you provided a pay stub and if the pay stub is good within 60 days, we just do verification of employment. Is this person still employed? That's all. Now with this whole COVID-19, they call you on the day of your closing. Not only do you have to be employed, your salary has to be the same as what it was and they have to specify that your employment is going to continue long term. Like, right, nobody knows what the future is. You can only talk about history. But now they're asking employers, what's the probability of the employment for this applicant? Because
Wow.
what banks are afraid of is, let's close on this mortgage. If you get fired tomorrow, how are you going to pay back our mortgage?
Right, of course.
Yeah, so that's a huge fear. Chase, as a matter of fact, massive lending institution, today is April 14th, they came out and they said anybody who's putting less than 20% down payment is required to have a 700 credit score. Credit scores were never a concern before. The lower your credit score, you obviously took a higher hit on the rate.
Right.
But now they want a certain credit score unless you're putting a big down payment. So they're looking for stronger, more qualified buyers. And when a bank like Chase starts doing it, Citi,
Everyone
all
else
those
will
other
follow.
banks will, yeah, they'll just become like a trickle effect. So absolutely, to answer your question, banks are becoming more tight. They're very particular to who they want to lend to.
Right, of course. Well, especially with all the unemployment right now and so many people have lost their jobs, it makes sense that the banks have become a lot stricter. And what about with the no income verification loans that mostly we see in our marketplace of North Queens? Is that still holding true with that as well?
I'd say if we had, in general, let's say there were 10 banks that were lending, these no income check banks were always lending off of REITs on the market. Wall Street would back them up, hedge funds. Those hedge funds, if they do exist still, that didn't take a massive beating on what they owed or what they were borrowing against. If they still have the money, they're putting their money on the sidelines. They're not doing anything. So 8 out of those 10 banks pretty much stopped lending. Their majority of banks we see stop taking applications in New York. If they're still in existence, they're doing business elsewhere. The ones that are still left over, the 1 or 2 that I'm talking about, they're very particular to what they're going to lend. So if they were lending 60, 65, 70% before, now they're going to cut that down to 55%. They're going to cut it down to 50% financing. And the one requirement that we're starting to see is not only do you have to have a 50% down payment, you got to have a 700 credit score, but you also have to have at least 3 months of reserves post the 50%. So if you think about it, Maureen, you're buying a house for $1 million, you got to have 500,000 for the down payment. Closing cost is another $50,000, so that's 550 you got to have, plus 3 to 6 months of payment reserve. So if you lose your job or if you can't pay, the bank's got to come in and take some money from the reserves from you. So
Right.
it's at least 60% down payment you got to have. So they are lending, very particular, very picky on who they're going to give money to, but they are still lending.
And these guidelines, I mean, they're changing so fast. I mean, we had a conversation 2 weeks ago and it wasn't as strict as it is today. So obviously, you know, what we're saying today could be different in a week's time or 2 weeks time. But right now you've definitely seen it like a tighter hold from the bank on who they're lending to.
Absolutely. Absolutely. Yeah. I always say, and you will concur with me on this, if you have an option to close on your mortgage, close on the mortgage. If you have an option, if you're in the middle of a real estate transaction right now, don't delay it. Don't think that the prices are going to drop. Don't think that you're going to get a better rate. Don't think you're going to get a better option, because it might very well be that you might not even get a mortgage. The bank will come in and they'll say, you know what, we're cutting our products. You can no longer close. Or if you feel that your employment is not a problem, consider that the bank can come back and say, you know what, we're no longer lending on these type of products. So whatever opportunity you have, work it out with the seller's attorney, work it out with your attorney where there's a post-closing possession, but just close.
Yeah.
Because you don't know if this is going to be a viable option. Like Maureen said, 2 weeks ago we were talking, we were still getting purchase applications, things didn't look as bad, but now as the unemployment numbers unveil and as banks are looking at their numbers and seeing how many forbearance calls are coming in, they said forbearance calls, 713,000 came in a matter of a week, which is ridiculous. So if a bank is getting so many forbearance calls without a consumer understanding what they're doing to themselves and how they're hurting themselves, the bank still has to pay that money, regardless of how much liquidity they're getting from the Fed. They still owe that money to some investor. So they have to continue paying on that note. And if the banks are losing money over there, they might as well come back and say, you know what, we're going to tighten our guideline over here. We're not going to lend. So a lot is changing. We're getting every single day a different bank is coming out. Like this morning, one of our banks that we did a lot of business with, they came back and they said, we're not taking any new submissions on investment properties. And we did a ton of investment properties with them. They're just afraid that the forbearance numbers are getting so high that money that they lend out will not be serviced correctly. So I remember in 2008, banks were doing this when they were closing. Right now, they're just being, again, more proactive to avoid losing everything and having to close their doors. So they're just going ahead of time and saying, we're cutting back this product. We're no longer allowing cash out, or we're going to limit cash out to a certain amount. And it just, times are changing. So again, just to reiterate, if you have a mortgage in place, if you're going through a transaction, close on it. Don't delay on the process whatsoever.
Right. And if you are, I mean, once they kind of take away all these restrictions and people are allowed back into the marketplace and people want to purchase, obviously there is a bit of a delay. What sort of things can they be doing now to prepare themselves to get a mortgage in 2, 3, 4, 5, 6 months, whenever we kind of get back into our routine here?
So I would say credit is super, super important. Credit has always been important. Just yesterday, we've updated Experian. So FICO in general, FICO is a company that controls all 3 credit bureaus. It's also known as Fair Isaac credit system. So FICO is what all banks lend based on. FICO is what, when you go shop for a car, when you go for credit cards, you always hear this word, what's your FICO score? FICO is tightening their guidelines. They initially released the news on January 23rd, and we thought that because of COVID, it might be delayed, but FICO is saying that because of everything that's going on, they want to implement this even faster, because if there's a recession or whatever that's coming, they want to make sure that banks are lending based on the correct information. So what FICO is changing right now is they're going to look more in depth for the last 24 months of your credit. They want to make sure that everything that happened in the last 24 months, they're going to want to know how much you borrowed. They're going to want to know if you borrowed that money, how soon you were paying it back, whether you were making minimum payments back, whether you were making payments above the norm, if you were paying it off quickly. Personal loans were never, ever put into the algorithm. Now personal loans are counted heavily against your credit score. Debt to income ratio is going to be super important. Late payments are going to be super important. So for anybody that has a mortgage that thinks that the forbearance is not going to affect their credit, you're very wrong. It will have a definite impact. It might not say that you were late, but those 3 months or 2 months that you're not paying your mortgage, there will be a gap in the credit. So credit will read this as no payment was made. Mm-hmm. And when you have no payment made, it will affect your credit score. So in 6 months, when FICO's 10 or 10T system goes into effect, that will have an impact on what you can borrow. And banks are tightening their guidelines. FICO will tighten their guidelines. And it just, most important, keep in mind that your credit score has to be strong, because the credit is going to determine your rate and your eligibility. Keep your money in the bank, or I should say, don't make any transactions, don't make any large deposits or withdrawals that are going to be questionable, and just stay in touch with Marina and her team in regards to houses. Like, if a good house comes along, jump on the opportunity, because house prices will not be falling. There's still too much demand. People need to live somewhere.
Right. We were already at low inventory before we kind of got into this, and all these people that were planning on putting their house on the market in the spring have now held off. So there are still buyers in the market, and there's still sellers who want to sell. In fact, in the last week, me and my team put 2 homes under contract.
Nice. Virtually, or?
One of them had seen the home. Actually, both of them had seen the home prior, maybe about a month and a half ago, through open houses. And actually the seller, both of them were very motivated to sell because they were building out of state and whatnot. So they lowered their prices a little bit, and all of a sudden the demand went crazy and multiple people were interested in both properties, and they signed contracts within a week. So those particular sellers, they wanted to kind of beat the market and have a secure deal. They didn't want to wait 2 or 3 months and kind of see what happens. So
Smart.
Yeah, so they cashed in. The buyers are happy with the deals that they got, and it's moving forward. But both those buyers as well were coming in with large down payments, 50%, had secure jobs, excellent credit, and were good candidates to get a mortgage. So we're pretty sure that those are solid deals. And
Excellent. And that's what's important, to have that good team. So a proper attorney can jump on it. I know you work with great attorneys.
Yep.
It's just got to be done so quick, and it's got to be done so properly, because you never know what's going to be changing. You never know what option is available. And it's changing
so fast. So I agree with you. When you have the opportunity to close, this is not something that you want to drag out and change and and think, you know, in a few weeks it will still be the same, because it may not just with everything that's happening there. And are you seeing any investors in the market? Any people who are just kind of buying to hold or invest or to flip?
So I was talking to somebody yesterday, and he says, a REIT just came out, somebody who owned a ton of properties, like a company like BlackRock or something like that. And he says they had this one particular block of 600 residential homes. And he says, I put a bid on it. He didn't give them full asking price, but we're talking about 600 homes. We're talking about incredible opportunity. And he's a big real estate investor. So as we were having this conversation, the question came up as to, why are you buying now? He says, when there's an opportunity, you take advantage of the opportunity, because what I'm buying right now, by the end of the year, when things correct itself, I'll make 20% on my money if I have to resell it. He says, even if I don't get those 600 homes, even if I could get 10% of them, 60 of them, I'll make my money at the end of the year, because people, again, real estate is the safest investment. Stock market, we all seen what happened to the stock market. People lost their pants on it. Millions, billions were lost on stock market. Gold's a great investment. Try to find gold right now. It's very expensive. Where else are you going to put your money? Like, real estate is the only thing that you can't build more of it. Just people want to put their money. People have money. They're just looking to buy. They want something. Absolutely. So yeah, there are a lot of investors. Just banks are not too easy on them now.
Right. Okay. All right. Well, is it a good time to refinance?
Rates are extremely low. If you're paying anything over 4% on your mortgage, absolutely reach out. We will do specific scenarios for you, 25-year, 30-year, see if maybe it makes sense for you to cut off 2-3 years on the mortgage. Or if you want instant gratification, you go back into a 30-year mortgage. Rates are cheap. Like I said, on the Fannie Mae loans, up to $510,000 or up to $765,000. If you need cash out, if you need that consolidation, it is an incredible time to refinance. And every time there is this opportunity, jump on it. If rates change in 2-3 years, you'll be happy that you did. If rates go down again for whatever reason, 2-3 years, you'll refinance again. There's no prepayment penalty on any of the mortgages. So absolutely jump on this and take advantage. If you could save $200 a month, $300 a month, it's well worth it.
Especially at this time, where every dollar counts.
Everybody needs savings.
Absolutely. All right. Well, is there anything else that you want to add, you want to share that the general public should know about mortgages at this time?
If you have a mortgage, just be wary again about the whole forbearance thing. I know that there's a lot of fake news that's out there. There's a lot of scammers out there. Unfortunately, some people want to make money on people at the wrong times, and they offer you modification options. They offer you forbearance options that are not real. Talk to your bank directly. Don't talk to any third-party companies. Don't do debt consolidation with anybody that just calls you. And like I said, there's going to be a ton of companies that are calling from call centers, pretending to help you. Be aware of that. Don't answer anything by mail. There's going to be a lot of mailers that are coming to you as well. I'll be more than happy to look at anything that you receive as to what we can do to help. So that is super important right now. And if you're looking to purchase, just be aware of your credit and take opportunity. Well, whatever opportunity. If you like a house, don't think it's going to drop more in price. Don't think that the rates are going to drop. Just take advantage of it. Let Maureen and her team show you what's out there. They know. Maureen's been in this business for the longest time. She knows. She has a history of this. Buy real estate. You can never go wrong. That's just my opinion on this.
Yeah, now's the time to buy and be able to write it out, and in years to come, you'll be glad that you did. So, so Robert, how can people get in touch with you if they have any questions regarding refinancing or you approving them to get a loan? How can they reach you?
So our office number is 718-969-7100. I'll also share my direct cell. It's 718-598-4424. The best way, I guess, is through phone. Maureen can provide, if you have any questions, Maureen has all my contact as well. Just reach out. The process, there's no cost to find out what your options are. We'll tell you what the rates are. We'll tell you if it makes sense for you, if it doesn't make sense, to hold on to it. just reach out, know your options. That's the best thing that you can do, is know your
Absolutely.
options,
Be
what's
educated
available.
and know and have a strategy and have a plan of which way you're going to move forward and what choices you have at this time. So
Absolutely.
absolutely. Well, all right. Thank you so much, Robert, for taking the time out to answer our questions. And if anyone has any questions, please do get in touch with Robert, or if you have any questions when it comes to real estate, as always, I'm here to be of service. So thanks so much, and we'll talk to you soon. All the best.
Thanks for having me, Maureen. Have a blessed day, everybody. Be safe.